the technology is evolving, and again, it displaces the existing technology. We use 75, 80-year-old technology, Swift and Fedwire and ACH, to move trillions and trillions of dollars around the world. And one of the things that gets lost on most people, because they just never stop to really think about it.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Mark Yusko breaks down U.S. banks adopting Bitcoin XRP, stablecoins, and new crypto laws. Massive shift ahead. Let's dive in.
When we talk about the market, right? People talk stocks. They think the S&P or the Dow. Well, the stock market is certainly big, again, tens of trillions of dollars, but it pales in comparison to the bond market. Bond market's orders of magnitude bigger. And those both pale in comparison to the currency market, which is orders of magnitude bigger than that, which then pale in comparison to the derivatives market, which are orders of magnitude bigger than that. So all of this is interrelated in the old system, right? The base layer, gold. Everything sits on top of that. Fedwire sits on top of that. ACH sits on top of that. The Visa and MasterCard payments network, PayPal, all the things that use this old technology. I mean, it's unbelievable to me, truly unbelievable, that if I wire money in TradFi across international borders using Swift, they send a fax, and I am not making this up. They send a fax from one bank to another bank as the proof, as the message of that transfer. And you're like, oh, come on. No, that can't be right. And I'm like, well, no. In fact, it's so right and so dumb that I tell the story. We had a client who was in Australia, and they got hacked. Someone got into their email. And when we sent a message to them saying, or an email saying, we're going to send a distribution from our fund, we got back a message saying, hey, I changed my wire instructions. And they're, it came from his email. So we didn't know that it was a hacker. And so we, happily wired the money to the other instructions. So he calls us, hey, there's a hacker. And so we call the bank, say, hey, can you help us track where the money went? And they said, well, yeah, that we lost the Swift message. Like, what do you mean? They said, well, we printed out the fax and it was on someone's desk and it got thrown away. Like, there's no electronic copy of it. There's no digital record of it. You're telling me that the only proof that money went from bank A to bank B was a facsimile? My mind, like literally that emoji of the mind blowing.
Bitcoin's price has been hovering just below the $110,000 mark since May 23, frustrating traders and sparking debate about what's holding it back. Despite several strong attempts by bulls to break through this barrier, the resistance level continues to push the price down. Over the past few days, Bitcoin has moved within a tight $3,500 range, and analysts say this pattern could continue in the short term. Market uncertainty is playing a big role. Traders are hesitant to make big moves as they wait for clarity on global economic signals. The U.S. Federal Reserve's recent meeting minutes and upcoming reports like the PCE index and jobless claims are adding to the cautious mood. Rising bond yields and geopolitical tensions are also making investors nervous, leading many to take a wait-and-see approach. Adding to the pressure are liquidity zones forming above and below the current price range. Popular trader Don Crypto Trades noted that the longer Bitcoin sticks around $110,000, the more these zones build up, pulling the price toward them like magnets. With big events like Nvidia's earnings and the ongoing Bitcoin conference, the market could swing either way. For now, bulls are fighting hard to defend support levels, but uncertainty keeps the price stuck.
We have this old tech that the banks are clinging to because they, JP Morgan, all those ones that you just showed, and all the other global banks, skim 7 trillion with a T a year in fees for doing all of this stuff so that we can take our money, give it to them, so it becomes their money, right? That's the fallacy of banking, right? You give the money to the bank, it's now theirs. Look on their balance sheet, it's on their balance sheet. And you have an IOU, but there are problems with IOUs sometimes. Long story short, these banks like that $7 trillion of fees. Blockchain, broadly speaking, crypto, does away with the need for that. Like right now, let's say I had a mother-in-law in El Salvador. Now, my mother-in-law is in Tulsa, Oklahoma, but let's say she lived in El Salvador and I wanted to send her money, right? A remittance. I would go to Western Union, I'd send the money, and she would get 70 pesos on the dollar because there's massive friction between the banks and Western Union and BIS and massive friction. Now, if I open up my Strike app and I send it to her across the Bitcoin blockchain rails, she gets 100 pesos. That's better. And XRP can do the same thing. And there's this battle royale going on for the soul. I mean, that's a weird word, but for the soul of the future payment system, banking, because we don't want to call it banking per se. It's the digital financial system. And it's just it's the simplest form of it is in the olden days, right? We had an analog system.
XRP could be gearing up for a major move, with traders eyeing a potential 48% surge that could push the price to $3.40. The excitement is building as the SEC begins reviewing Wisdom Tree's application for a spot XRP ETF, a move that could significantly boost investor confidence. This review, which officially kicked off on May 27, has already sent approval odds soaring to 84% on Polymarket, a big jump from just a few weeks ago. On the technical side, XRP is showing signs of a bullish reversal with a classic falling wedge pattern forming on the daily chart. This pattern, known for signaling upward breakouts, suggests weakening downward momentum. XRP is currently retesting resistance near $2.42. If it breaks through, it could trigger a sharp rally toward the $3.40 target. Traders like CryptoHazard believe a breakout could push XRP first to $2.80 and eventually to new all-time highs. To maintain this momentum, XRP must hold above $2.20 in clear resistance levels at $2.60 and $2.80. The Relative Strength Index also supports a bullish outlook, rising from 31 to 47. With ETF speculation heating up and technicals aligning, XRP might be on the verge of its next big leap, especially if institutional players jump in. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.